Today, I'm going to show you how accurate my Q1 forecast for Coinbase was and why you shouldn't listen to Wall Street experts. All on my journey to take $6,000 and turn it into $35,000, $45,000 to buy a Model Y Tesla. Let's jump into it.
Don't ask them, what do we know? What I forgot is better than whatever they remember.
I am Delta, an economist with over 20 years of investment experience. And if it's your first time here and you want to learn how to invest in crypto and stock, best way to start is hit that like and subscribe button so you don't miss anything. Today, I have a special show for you because Coinbase announced their earnings today and my forecast was dead on. I made a cool visual to easily show you all the aspects of how they make revenue and all their expenses. So in one picture, you can easily see the income statement of Coinbase and how they're making money and how they're spending money. Let's jump into it. All right, let's take a look at the visual I made for Coinbase earnings. I posted all of this on my Twitter. I will also post it on the Substack with a possible write-up. So highlights are earnings per share were $4.40 versus expected 50 cents. Revenue was 1.6 billion versus expected 1.1. I expected 1.6, but that's just me. All right, let's dive into it. First, we'll see that transactions were about 1 billion. The newest addition here is the other transactions, which is base layer 2 on Ethereum, growing really fast. And we can expect this to really start generating significant, I mean, it's already significant, 56 million, but this can be way more in the future. Stablecoins were at my high estimate, which was 200. I said 175 on my original forecast, but I said it could be as much as 200, and it was 200. Given that the interest rates are still high and the Fed chose to keep interest rates high, this will continue into Q2 for sure. Possibly even more if more USDC coins are minted. Blockchain rewards, again, higher than my forecast and then what was expected. It is 150 million, largely because Ethereum price went up. So it is a percentage of rewards. Now, there is subs that were 63 million for Coinbase One. This is a really huge number. I think this could be seasonally adjusted for tax season. If you subscribe to Coinbase One, Coinbase produces a form for you and does some of your taxes for you. Makes it easier to do that. That's one of the reasons I subscribe. But they've started adding a couple of things. If you're just using the Coinbase regular app, then you can trade for free up to $10,000. This isn't the best because there's some slippage happening. But if you use their advanced platform now and you're subscribed to Coinbase One, you get 25% of your fees refunded, which is nice because they didn't do this before. Now there's value. Arguably, if you trade a lot, you can get that $30 back in the refunded fees, and then it's worth it. Plus, you get insurance for, I think, $1 million in your account and other stuff. There's other benefits, research, access, and other things. Now, custodial fees, I expected actually 60 million, but this is only 32, which is still 50% more than the previous quarter. Previous quarter was 20. I expected with the launch of the ETFs for this to be bigger, but it's not. But I'm sure other subscriptions and interest income came from there as well. All right, and then their expenses were pretty much in line with what they guided, slightly larger because it's a percentage of transactions, for example. One interesting thing is they took some gains on their crypto, which lowered their expenses. This is actually 877 once you take out the 86 crypto gains. Plus, for their operating income, they added $650 million of mark-to-market of the crypto that has gained in value that they have on their books. Operating income here is 76 million plus added 650 of the value gained from their crypto investments, and other income 45 gets us 1.17, call it $1.2 billion. Now, this is a comes out to fully diluted earnings per share of 440. Analysts were expecting 50 cents to $1. So you can say this is maybe 780% beat. Revenue 1.6, expectations were 1.1. This is a 71 increase from the previous quarter, $683 million more than Q4. And it's just insane. So one thing that we can take away from the huge earnings beat is that earnings per share of 440 times 4, if they do this consistently for the next 3 quarters, equals about 17 point something 6, right? At 220 divided by 17.6 gets us 12.5 price to earnings ratio. A high growth tech company that's very profitable should not be priced at 12.5 price to earnings ratio, which means that it is likely to go up in price in something that's called multiple expansion. Right now, the multiple is really low, 12. Average for stocks is about 15. For high-tech stocks and high-growth stocks, it's usually much, much higher. 30, 40, 50, 60, 70, 80. Look at Amazon, look at Nvidia, look at Tesla, look at Square, Block, look at financial companies. So this is a financial company, this is a tech company, this is a leader in their field. Of course, there's going to be multiple expansion if they consistently can produce this kinds of earnings. But 12, it's pretty low. So I don't see why this company's share price wouldn't go close to 500, maybe even 1,000 if it continues growing at this pace for the next few quarters. So this is going to remain one of my biggest holdings. But I'm curious to know what you think. Do you think this is a valid multiple expansion narrative or strategy, or do you think I'm wrong? Comment below. Now, if you look on Robinhood, I made this little graphic. Robinhood is full of shit. They showed 50 cents of earning EPS as expected, and then once earnings came out, they changed it that somehow they expected $1, but like minutes earlier they expected only 50 cents. But then even after the earnings, they only show 165. I actually accidentally used this number while I was watching it live because I didn't double check. So yeah, I call it bullshit number because it just shows a slight gain when actual gain is $4.40, which is $4 gain. It's off the chart. It's 780%. Let's not pay too much attention to Robinhood numbers ever or use that app. It's freaking terrible. This is actually what happened. Huge gain. Now, the market hasn't moved the way we expected. It's still up 10% for the day, Coinbase, but we expected more given how huge of a beat this is. Now, here's the forecast that I put out, months earlier. I expected 1.6 billion, 1.61. They delivered 1.64. I was off by 30 million. It's pretty good. It's pretty damn good. My biggest faux pas, I'll say here, is I expected the custodial fees to be much bigger from the ETFs. It was only 50% bigger. I expected 300% bigger. Everything else is pretty cool. I did not know how to account for base. And now we know that they're including that as a separate item in their earnings, which is other transactions. This is base. So overall, I'm really happy with my forecast. I'm not happy how the market is reacting as of now, but let's give them time, a couple of days, couple of weeks to see if they catch up to what we expected and knew. Now, I'll often get asked, why did I get the forecast so right and the Wall Street analysts got it so wrong? I mean, don't ask them. What do they know? What I forgot is better than whatever they remember.
Don't ask them, what do we know? What I forgot is better than whatever they remember.
Now you know why that's the intro to my videos. The most important part that was the biggest risk us betting big on Coinbase, even assuming that my forecast was going to be right, was that they could guide much lower. And guidance is very important. April was a good month for crypto and Coinbase, so they guided pretty much in line to the same earnings as they just had in Q1. Same expectations for expenses, and we're expecting the same amount of revenue. Now, the expenses right here, you can see the transactions, technology development, subscriptions, services, revenue. So they expect the revenue to actually, subscriptions and services to be more than 510, which was the current. The subscriptions was 510. Now they expect, 525 to 600. Possibly next quarter will be a little better. 300 million of total transactions revenue. If you multiply that by 3, then you get yourself, something similar to this, which is 900. And April is actually now looking as good as March looked. Maybe May or June will be better months. And then we can see this even bigger than this. Maybe 1.2 million here, 6 here, that's already 1.8. Possibly other stuff adds here to maybe 2 billion. Yeah, between, I want to say 1.6 to 2 billion for next quarter in guidance. And given that guidance, I can't imagine the stock going down. And in fact, I am expecting it to pop. Maybe everybody saw the Robinhood earnings per share that were way off and didn't buy accordingly. Now, most importantly, we made a big bet using options to see if we can turn $6,000 into $35,000 in the next 2 weeks, betting on my forecast being right. It's a way of betting on yourself. Let's see where those options are at currently. I only have one of the options that's in the negative right now, which is the 280 call option that expires May 17. I paid $8.60 per share for 2 of them. Cost me $1,700. Right now it's only worth $11.30, which means it's down $600 or 36%. Still went up 72% today. I bought it a little too early. But I bought other ones a little later. I bought one of each of 250 and 270 at 6 and 380. They're now 12 and almost 6. They're up 98 and 41%. Also, I bought 2, 2, and 3. I also bought 2 of the 220 strike call options. All of these are expiring May 17, except the 2025 one. We're not going to look at that one. That's not part of this round trip to get a Tesla. This is something I bought previously that's up 700%. We're not counting this one. This one alone buys a Tesla for $6,000, right? It cost me $5,800. It's now 40 grand. Oh, it's up 40 grand, so it's 46. So I could have bought a Tesla with just profits of this one. We're not going to count this one. That's not what we're doing. We're going to use these. So we have a 2 of 250 that's up 43%, and the 271 is up 6%. So we are about, let's say, throw that one out with the other one. We're up only 2,200 as of today. Hopefully, in the next week or two, before this expires, we'll be up enough to cash all these in and get ourselves a Model Y as we planned. So there you have it. That is the results of Coinbase Q1 earnings. My forecast was very accurate. I'm very happy. I'm expecting the price to appreciate once the rest of the Wall Street registers what just happened, and that the guidance is good and that they delivered and beat expectations by a huge margin. Within next week or two, I plan to sell my options in order to raise capital to buy that Tesla. This was the plan all along. So join me on this journey to see if I can get this Tesla using Coinbase options. Don't forget to like and subscribe. It really helps out the channel. It's the best way to support us. Hope my forecast and thought process on Coinbase and other investments has been helpful to you. Until next time, may the force of compound interest be with you. Peace.
Peace.